Hey, Crypto Hotep here with another investing video going into the family portfolio. If you haven't caught the rest of or the beginning of these episodes from week one, feel free to view the week one episode of the family portfolio, which gives the whole methodology behind why I made the family portfolio, what I'm trying to do with the family portfolio from an investment standpoint, and what stocks and holdings that it's made up of, and how I've segmented it in M1 Finance, which is my broker for this. This is week four, and I'm trying to stay consistent with these videos. So with week four, I wanted to start out, and before I begin, nothing is financial advice that we go through in this video. This is just personal opinion on stocks. Please consult a professional before you delve into any stock trading or stock investing. But these are, again, these videos are for my own edification for investing, as well as my family. And I really want to make them for my kids, so maybe I can educate them on investing as well, even though I'm kind of doing it with them and for them. But maybe they can view these videos, once I'm long and gone, they can view these videos and maybe carry that torch on. Um, with that being said, we're in week four. I wanted to bring up, my Twitter to show what the balance was for week three. So we can do a kind of a cost comparison here with the balance. So, this was a week three update in the video that I made here. And the balance was about 491.84. Now this week five, we are at 523.50. And we do have a little bit of buying power here. So we did crack the $500 mark, which is a great feat. It's a good milestone to have. It usually goes 500 and then the next one is 1,000. So very good to see that our portfolio uh, is at plus 500 right now. Year to date, also increased. We're looking at 6.51% rate of return currently. As you can see, the net cash flow is about 374, and the market gain is around 17 bucks or so, with about $1.50 with dividends. We will go into the activity just to see what we have going on here. So drawing your attention to the dividends, because this is the activity that we had last week that I covered, with McDonald's being a dividend, and then we also had some buys here. So this week we have two dividends to cover. So we had dividends from Texas Roadhouse, which is part of my pie set of the portfolio here. So only 2 cents, right? And then I got my first dividend payment from Meta, which was pretty cool. So Facebook, and they just delved into the dividend pool a couple months ago. So very cool to see this, because we're just adding on to these positions. So very great, very great to see that. Hey, not really focusing on the dollar amount and just focusing on the consistent of the dividend. So with that being said, we did make a deposit today, and again, these deposits are any loose money that we have laying around that we just want to throw in here. So we did make a deposit, and we had 11 buys, which decent amount of buys. So and we had those buys today. So we had Celsius, which, as we all know, goes to my wife and her section. Love Celsius. Apple. We have Tesla, which is to our youngest, loves Tesla. Nintendo, which is to our youngest and middle. Johnson and Johnson, which is for me. Pepsi, which is for my wife. McDonald's, which is for me and our oldest. Amazon, which is for me and my middle. Broadcom, which is for me. Google, which is for me. And Costco, which is for me and my middle. So had a couple buys here. Decent enough buys, and added to those portfolios, and we'll dive right into how each of our sections look. Okay, so as we can see here, what stands out to me is my wife's portfolio, as always, and I'm pretty encouraged here. And I'm encouraged because these values are going up consistently. I like to see that. Um, my wife, my wife's stocks is still in the double digits for growth, and we will jump in here to see where she's at. So her gain, her rate of return is over 10% at 11.7%. She's in the green all across the board. So Google is up, Pepsi is up, and Celsius still with double digit growth at 15%. I'm very curious. Let me see her average price on Celsius, $76. So you can't beat that. You cannot beat that with a stick right now with what Celsius is currently. So very good, very good positions that my wife has right now. Only three stocks. Sometimes less is more, but very good movement on hers. And again, she's carrying the family portfolio currently, just based on that percentage. Next, um, we'll go to our middle and middle stocks. Uh, they have Amazon, Nintendo, which is a little down, and then Costco, which again is down. It's been at an all-time high. So I honestly think Costco's taking a breather here. Not really worried about that. Amazon carrying on strong. Not worrying about Amazon at all. Nintendo, I'm just looking at Nintendo. Nintendo overall is a great company, so I'm not really concerned about their future, and they have no debt, as I've always said. So that's why I haven't made any adjustments to either our middle or youngest portfolio as it relates to Nintendo, because I feel very good about that. Youngest Nintendo, same premise as our middle, down. Apple down as well, and then Tesla has bounced, and our youngest is feeling a good chunk of that bounce there. Overall, our youngest rate of return -2%, so down a little bit here. But all in all, nothing too alarming on those stocks here. And then our oldest has actually moved up the ranks here. So our oldest typically was in that bottom half, but our oldest is looking pretty good on the balance side. So even though our oldest two stocks, Apple, McDonald's, even though those are in the red, the balance is pretty substantial for those two. And again, it's kind of on that premise: less is more. We have less stocks to kind of level out the balances. So, and then last but not least, my stocks here. We have 2% return currently, and my categories looking pretty good across all the categories. As a reminder, on the shopping, I did take out Nike. From my last video last week, I took out Nike and brought in TJ Maxx right here, and up 2%, so pretty good there. Not bad at all. But I have no qualms at all with my stocks at all. Nothing glaring is sticking out. On the technology side, that's one of my biggest positions, and that's one that's kind of near and dear to my heart. Coinbase leading the charge here, as well as Google, but Coinbase on absolute tear. Crypto, bullish pump. Bitcoin halving is in April, so I'm expecting coin to just continue this bullish trend. Um, We also have AMD down 15%. We did buy this at a higher point, so not really worried about AMD like that. I still want to keep it for the AI, for the kind of the AI future along with NVIDIA. So not really worried about those positions like that. I want to keep those. And let's look at And let's look at restaurants and food here. Restaurants and food, again, mostly in the green, except for McDonald's. McDonald's is on a downtrend, but Domino's had a really good day today, hitting an all time high, up 10%, which is amazing. Um, Again, Texas Roadhouse, we saw the dividend. Hershey still have Starbucks, and the king, the GOAT, Coca Cola, as always. And, and kind of swinging back to technology, one of the stocks that we are going to analyze today is Apple. And I will kind of switch gears here from the family portfolio. But quick review: family portfolio year to date up 6.5%, gain of about $17. We have earned some dividends here as well. All in all, the collection of stocks that we do have is showing promising return. I do believe that all the stocks that my family has and invested in are good stocks that they can hold for a very long time. So all in all, very pleased with this. We have a nice jump from 490, I believe it was 490 last week, to 523. So we are continuously on the uptrend here, as you can see here. So good feeling. And with that being said, we're going to swing over into Apple. Apple is going to be the stock of the day that we're going to be analyzing, only because right now it's on the downswing. The 1 year chart, where Apple's actually up 7.5%. But if you follow the narrative of the market and the narrative of the mainstream media, you would think that basically Apple fell off a cliff. It is down 5.5% within the last month. And honestly, I think it's a retracement and it's a dip for Apple. I would never bet against Apple when it comes to AI or technology, period. And the suit that is against them from the U.S. Department of Justice doesn't seem to hold a lot of weight because it's based off of a monopoly practice. And one of the key points against Apple is that when people are in there, if people own Apple products, that bars them from operating another type of ecosystem. And honestly, when I read that, I'm like, yeah, and everybody knows that. It's not like, we don't go to McDonald's and ask for a Whopper, right? We know that if we have an Apple iPhone, it's only going to work on iOS. We have to purchase the apps through the App Store. This is just, a prerequisite that you should go in knowing when you purchase a technology device. And at the same time, it's not really a monopoly because you still have Google and you still have other phone brands that are still making operating systems and phone devices. So the lawsuit itself does not seem very weighted. Is not weighted heavily to me, and it doesn't hold a lot of weight either. So with that being said, we'll just go through Apple here. Financial performance over the years. The analyst forecast for Apple is a buy. Me personally, I think it's a buy. Usually, when stocks are in the red and when they're getting pummeled with a lot of quote unquote bad news from the mainstream media, especially if they're historically great, that's usually the best time to buy. Again, that's not financial advice at all, but everything considering Apple, you know, its its stance in technology has been cemented already, and it does have to delve more into AI for that competitiveness and that innovation, which I think it will do. So I wouldn't bet against Apple at all. Um, with the financials, the year over year growth, it did see a downturn for last year at a negative number, 2.8%. So again, not really horrible, and it still stayed aligned with 2021 and 2022 numbers. Again, not really worried about that. With the down peak, or with the downtrend in revenue. Also, net income dropped at 2.81% as well. Um, not I'm still not concerned about that. The dividend per share was still in line with the dividend per share of last year. And let's see. Again, going to the balance sheet, they decreased the negative growth that they had on cash growth. So they closed that number, or they tightened that number down, which was good. Let's see. Retained earnings, similar to the cash growth, they've brought that down as well. They've also reduced their debt as well here, which is good. And just looking at the net income still aligns again with 2021, 2022 numbers. So nothing really alarming for me that stands out. I like that the retained earnings, when I'm looking at this, the negative growth has gone down tremendously. That brings me even more optimistic. So because again, those retained earnings, we want those retained earnings at positive, and this is as close as it can get. It is still a negative, but it's closer to zero, which is closer to a positive number. And those retained earnings is what is basically cash flow that's not paid out in a dividend that the company can use for uh, for investing back into their company or paying off a debt as it comes about. We look into the dividend here. One thing with Apple, I do like Apple a lot. The dividend is low because the thing about Apple, and I think honestly with any dividend stocks, you have to look at it from the perspective of you have to incorporate your total rate of return and not just your dividend rate. And I think that's when new people get into dividend stocks, even me, sometimes you'll look at that dividend yield and you may be disappointed. But there's a couple things that you have to look at is you have to look at a dividend growth. And I like a dividend growth between 3 to 4%. This is at 4.35%. So this is good. The payout ratio is way below what my threshold is. My threshold is about 50-60%. Not mad at that at all. And I think with the 0.56 dividend yield, you'll see a lot of companies similar to Apple, like Meta, for instance, they have a low dividend yield right now because you're taking into consideration the appreciation that the stock is going to grow. You're expecting Apple's stock price to grow over time, which historically it has done. If you look at the chart, you look at the chart long term, it's a consistent uptrend. So it is having a rough time right now, but I think it will get back on track with that. And they've been pretty consistent with their dividend payout, and it has increased as well, as you can see. So there was a dip. 2019, their dividend growth went from 15% to 5.48%, and then it dipped down to in 2022, and it's been kind of stagnant ever since. The dividends over 10 years have grown consistently here, and all in all, I feel very good about Apple. We'll go into the charts. As you guys know, I am a chart guy, and we'll start on the higher time frame, which is the weekly for me, just to kind of zoom out here and see what we got going on. So, and I'll actually go to the monthly here. So as you can see, from a long-term trend, we have Apple here from a higher time frame, and as you can see, it's been consistently just in an uptrend. It almost looks like the S&P chart, if you want to be honest. So it it hasn't broken the 100, MA since hasn't broken the 100 MA since '03. Actually '02. My apologies, '02. So it hasn't broken the 100 and 200 since '02. That's a pretty good average. It's not even close to breaking it right now. So again, I'm not worried about Apple at all in the long term. As the world gets even more technology savvy and delves more money into technology, Apple's still going to be a main player for that. And I think one thing that I did hear is one of the components of AI that Apple is delving into was also created by Google. So what's funny and what is a very smart move of Apple is they're having competitors or like-minded companies create tools that they want to use, and all they're doing is just partnering with them, which is a very smart thing. Zooming in on the daily, Apple is at the pivotal level of 168, between 168 and 174. This is the range that it has traded in since May of 2023, so almost a year now. And 168 is held. So that's the hold. Now on the daily, it is below the 100 and the 200 MA. So it is below that. So my thoughts would be price would come up into that 174, potentially wick that, and we may see a retest of 168. We'll see. What I would like to see is I would like to see price break 174 into the 175 area, retest as I thought would happen here, and then get into this golden zone that I did draw. So what I thought, what did happen, as you can see here, is price broke above, wicked that key area as it did, so often ago at 195, came back into the golden zone, bounced, came back into the golden zone, bounced again to right now the daily flipped resistance here, and then that rejected it, and price came down. Now, when price comes back into that zone, there's a hard rejection down because you're not looking at the bounce, and now you're on the opposite side of the trade. Now you're on Now you have price breaking down the 100 and 200 MA. So you're looking more at a short type of sell here. Okay. And that's kind of where we're at with Apple. So right now you may see a little bit of choppiness here, or we can see this break above 175. So with that being said, guys, I hope this video was helpful. And if this video was helpful, feel free to like, subscribe, comment. Let me know what you think. But as always, thank you and happy investing.